안녕하세요. 저는 BNK핀테크랩 운영 총괄을 맡고 있는 홍병철입니다. 오늘은 저희 4기 외부 강연 시리즈 1편으로 홍콩 베이스에서 핀테크 기업에 투자를 전문으로 하고 있는 펀드인 AFG Partners의 란 사비노 대표님과의 대표 강연을 듣고 강연 후에 저하고 사비노 대표님하고의 대화를 이어지는 프로그램입니다. 오늘 강연을 해주실 란 사비노 대표님에 대한 약간의 소개를 먼저 시작을 하겠습니다. 사비노 AFG Partners 대표는 금융으로 유명한 미국의 유펜 월튼에서 경제학, 금융학, 회계학 전공으로 학사를 받았습니다. Coopers and Lybrandt라는 미국의 빅4 회계법인 사무소에서 뉴욕 사무소에서 감사 회계 업무를 시작으로 커리어를 시작했습니다. 그 후 뉴욕의 ING 베어링 증권사의 내부 회계 감사 업무를 하였고 ING 은행의 홍콩 지점에서 도매 금융 업무를 시작으로 뱅킹 커리어를 시작했습니다. 그 후 ING 은행 서울 지점에서 2년간 근무를 하기도 했습니다. 그 후 Bank of America Merrill Lynch 아시아로 옮겨 홍콩에서 Global Markets Financing and Services 사업부에서 기업 자금 조달부에서 시작을 하여 COO로 승진하였고 그 후 아시아 지역 Futures and Options 선물, 옵션, 파생 상품 부서로 옮겨 총괄 헤드로 근무를 하였습니다. 그 후 2015년부터 핀테크 엔젤 투자로 활동을 시작하였으며 주로 시드 단계 또는 시리즈 A 단계의 초기 단계의 아시아 핀테크 기업들에게 투자를 시작하였습니다. 그 후인 2020년 6월 현재 운영 중인 AFG Partners라는 2,500만 불 규모의 펀드를 조성하여 동남아 시장에서 금융기관, 기업, 그리고 핀테크 기업들을 대상으로 B2B 서비스를 제공하는 핀테크 기업들에 투자를 해오고 있습니다. 자신의 펀드를 운영하면서 액센추어가 운영하는 액센추어 핀테크 이노베이션 랩이라는 아시아에서 탑 핀테크 액셀러레이터 프로그램의 외부 멘토로서도 활동을 해오고 있습니다. 액센추어 핀테크 이노베이션 랩은 글로벌 IT 컨설팅 회사인 액센추어가 전 세계적으로 각 지역의 유명한 핀테크 기업들을 발굴하고 육성하고자 시작한 액셀러레이팅 프로그램으로 아시아의 경우 12주 동안 초기 단계부터 성장 단계에 있는 아시아 시장 진출에 관심이 있는 핀테크 기업들을 대상으로 하는 전문 육성 프로그램입니다. HSBC, AIG, BlackRock, Goldman Sachs, JP모건, UBS와 같은 글로벌 금융기관들이 본 프로그램의 파트너로 활동도 하고 있습니다. 이제 곧 저희 오늘의 메인 강연사이신 란 사비노 씨를 제가 소개를 하겠습니다. 란, thanks again for accepting the invitation to be our guest speaker on this very important topic about the emerging importance of the Southeast Asian market for fintech industries. And so the audience is all yours. Thank you.
Yeah, 감사합니다 and 안녕하세요. Thank you very much for this opportunity, and really appreciate the opportunity to speak to the audience in Korea. I think I did hear, I got a little bit of caught the ING Seoul part, so I think we probably touched a little bit that I actually lived a couple of years in Seoul in South Korea. I was working with ING. It's about 20 years ago. It's quite a long time ago, but I have a great fondness in my heart for the South Korean country and the people. And so it's really a privilege to be here. Unfortunately, my Korean is incredibly rusty. The only things I really remember is how to order a beer or a kalbi or 맥주 at a kalbi in a restaurant, and also to say 한국말 조금 해요. So it's very little Korean. But thank you for the opportunity. I'm gonna pivot back to English, which I think will be a little bit more interesting for all of you and more effective. Let me share my screen. I did prepare a presentation for discussion today. So if it's okay with you guys, I will share. Please let me if you can see my screen. Perfect. So we are AFG Partners. We'll get into that a little bit towards the end of the presentation. I have a bit more about who we are and kind of what our thesis is. I think you've got my background, so I don't think I need to talk more about that. I think what we'll do is we'll just go right into the presentation itself. This is about Southeast Asia market. Now, just a little bit of background. We do broadly Asia as a whole, which again is a big undertaking, but we will look at North Asia, including Korea as well. And Southeast Asia, of course, is a major focus. It's a major focus for a variety of reasons, which we're going to get into here. And I would say probably almost everything we do will touch Southeast Asia in some way, shape, or form, either by companies that are based there or companies that want to enter the region. So for us, Southeast Asia is a very significant part of our focus. We're going to take, I guess, 4 different subjects here. One, just a broad market environment, which I think is going to be probably pretty obvious to most people. Then there'll be a little bit more about what we're seeing on the demand side in the fintech. So what sort of fintechs we're seeing. I think we'll then obviously talk about funding. That's been a very hot area in 2021. And then lastly, as I mentioned, we'll get into a bit more about what does AFG do and give you some background on our thesis as well. So getting over to the Southeast Asia market environment, and I apologize, quite a number of our slides have Hong Kong backgrounds because that's where I'm based. So I have it updated for Southeast Asia, but just bear that in mind for the people that are more observant of the Hong Kong skyline. So right here, Southeast Asia, I mean, you know, the numbers say it all in this slide. I mean, it is very clear that Southeast Asia is hot. A hot area, and for very good reason. I mean, the numbers speak for themselves. I won't run through all these numbers, but you know, when it comes to the demographics of population growth, the young population, the obviously the strength in GDP, and more importantly, household wealth are all factors that are driving Southeast Asia. From you know, all broadly aspects of industry and commerce, but certainly fintech is riding that wave. So that's very clear. I think we'll get into a few more numbers. Another thing, internet penetration. I think that's another element that, you know, certainly Korea was way advanced even when I was there in technology, and Southeast Asia is catching up, and it's catching up very quickly in the sense of penetration around the internet. You can see some of the numbers here. I think one of the things interesting is how many of the internet penetration is now purchasing online. That's 80% and 350 million. If you look at the next slide, what you can see is that 350 million has grown from 290 since the beginning of the pandemic. So this acceleration is continuing, and that 350 number, just as a reference, is from June of 2021. So I'm sure it's increasing even further. And I think the reality is you know, the world has changed. I think all over. I think the pandemic has certainly been a catalyst to some extent, but the world has definitely changed, and we're not going back. Another thing that, you know, we're looking at is it's not just the number of users and who are purchasing online, but also how much they're spending online. And we're starting to see some statistics here that the increases are significant already and are expected to get larger and larger. So I think that's a combination of a bit more wealth, a bit more confidence about you know, shopping online and doing it with more, let's just say, expensive products, and that's driving that as well. I think where I want to pause here, and that was a bit of an intro on different stats and things like that. I think, you know, and we alluded to the pandemic being a catalyst, and it certainly has been, but there's more to play it here. I think this trend is not just a COVID trend. This is a trend that has basically been driven by tech and technology in 2 different ways. It's the tech itself that's evolved over the last few years, and it's the tech companies that we've all become used to, and the experiences and the expectations that has come with by dealing with big tech all over the world. And I think, you know, if you touch on each of these things, I mean, the technology is very obvious. You know, whether it's AI, machine learning, whether it's cloud computing, microservices, the growth of APIs and blockchain and the distributed ledgers, all of those things have enabled financial services to change and to evolve. And I think in very simple terms, what has that tech done? It's really allowed us to create more financial services and providing them to more people in a more personalized manner and in a more efficient and cost-effective manner. And so by having this technology layer, doing all of those things, it's really what's driving, I think, this digital adoption and this growth in fintech in Southeast Asia. And then when we just touch on the tech companies, I think, all of our experiences have really been changed, not just for financial services, but our whole customer journey and our customer expectation has changed. And we're talking about, again, being more personalized and targeted. We want things that are relevant for us, that's timely for us. We want things developed in a seamless manner. We want it embedded in a process. We want it very simple, straightforward. We don't want it very, a good user experience. We want it now, real time, on our phone, whenever we want it, where we want it. And I think lastly, we want it priced cost effectively and transparency. And all these things are what tech companies have driven, I think, not just, the world, but also in Southeast Asia. And I think that's really primed Southeast Asia in particular for growth of fintech. Now I'm going to get into a little bit more about, what we're seeing, the different fintech trends and the areas of fintech that we're seeing a bit more in Southeast Asia. We've got some really interesting slides here. There's a bunch of numbers on here. I think, the key thing, the key point to note here is that basically digital financial services have grown significantly in Southeast Asia over the last couple of years and are expected to grow at really rapid levels. The acceleration of the growth is very clear, and the continuation of this growth. And you can see some of these numbers here. I think the interesting thing also to note is that fintech, especially in Southeast Asia, used to be a payment story. It was all just about payments. It's still about payments. Payments are huge. Payments are really important. You'll see that later on. But you can look at the growth stories. The growth is coming and really expected to come significantly in areas outside of payments, in other areas, whether that be digital lending, digital wealth management, or digital insurance. And we'll touch on each of those on additional slides. But, first back to payments. Again, the numbers speak for itself. It's incredibly the growth engine around fintech for sure for a number of years. I think the reality though is the consumer angle has been what has gotten most of the focus. I think whether it be wallets or other elements of adding new payments and BNPL services. But really what's also happened is we're talking more about the growth, and what we're seeing now is the growth around SME and business payments. That's been the real big story of late. That's where we're seeing a lot of stuff. That's where we're really interested in. And it's similar concepts about what we want, as a consumer. Businesses, they just want to make their experiences easy for them. They want no code. They want cheap solutions. They want faster payments. And they really want to have a variety of options to basically appeal to their customers who all have different preferred mechanisms. And to build this stuff themselves and to figure out how to access all these payments is really not practical for most businesses, let alone SMEs. And so what we're seeing is a significant growth around the development of solutions around SME and business payments. What's also helping is we're seeing a lot of government initiatives, whether that be real-time payment systems, so really nationwide solutions to improve bank-to-bank payments and increase the payments around it, but also a large focus now on open banking, open finance. It's still early days. We're starting to see a little bit more government actions and movement towards providing more open banking and open finance, which again will help really push, particularly in the SME and business payment space. And I think the other thing is what we're seeing on the back of this is a lot of fintechs that are focused on solving these problems, working on no-code solutions for payments, working on embedding payments as a service. So that's really a big part. So when we talk about payments, at least as a fund, actually the part we get excited about is really more this B2B and SME type payment solutions that we're seeing. Lending, exciting times as well. I think the simple thing about lending is it's really being driven by data. There is just so much more data now available in Southeast Asia, where, as we all know, or we probably are aware, credit agencies and the availability of credit data and credit files are very, very hard to come by. But now we're in a situation where, this data is so much more available, and particularly, again, around SMEs and businesses. So what we're seeing, again, is a lot of access and a lot of fintechs that are focused on pulling data from various systems. So whether it could be directly with the accounting systems and integrating with the accounting systems of the different institutions. It could be POS data, so point of sale data. It could be e-commerce data that comes in. And really is also with open banking, as I mentioned earlier, there's just more and more things that could even come through your banks and other aspects where the rails of getting data and being able to drive lending because we have better data is really starting to grow in Southeast Asia. And I think because of that, what we're seeing is really, there's a phrase, everyone's going to be a fintech, or everybody's going to be a fintech. Part of that means is everybody's going to be a lender. There is so much lending going on right now because of this availability of data. So the lending is getting better by banks and institutions. Certainly now we see them moving in that direction because now they have more data. It's more cost effective to deliver solutions. But of course we see fintechs doing this. And of course, what we're seeing is other non-financial institutions. So basically, corporates themselves effectively providing lending solutions and really leveraging lending as a service or banking as a service platforms. And so they understand that they have a client base, they have a lot of data. They may not build the lending themselves, but they can rely on third-party solutions and fintechs to help them effectively provide lending as a service. So we're starting to see quite a bit of that. In regards to digital investments or digital wealth, I think the two key points here is that, we're seeing growth in a couple of different ways. We're certainly seeing it in the sense of across all segments. The digital wealth story here in Southeast Asia is certainly not just the consumer level, and it is the mass market, but we're also seeing it at the top level. We're seeing it mass influence, we're seeing it high net worths. Everybody is really kind of understanding the importance of wealth management in Southeast Asia. It's a growing area of wealth. And so really up and down the segment, we're seeing solutions. I think the difference where you kind of have is really maybe between developed markets and less developed or more emerging markets and the types of solutions and really who the players are. I think in the developed markets, the reality is the incumbents are trying to do more and more. I think that they are understanding that they need to improve their services. And they, again, in that stage, working with B2B fintechs and helping them kind of provide better customer experiences and provide more personalized experiences and offer a much better solution. But we're also seeing the growth of more independent fintechs that are, appealing a bit more to the millennial population. And so, that's something that's happening more in the sense of being able to provide a variety of different product offerings as well. So not just, typical equities and fixed incomes, but also maybe some alternative investments and other aspects of investments that have maybe been less available to the mass affluent and the broader mass market. I think in the developing markets, it's still very early days in a lot of it's education. A lot of it is really small dollar access. It's trying to bring a population into the investment world as opposed to necessarily improving the existing experience and streamlining an experience for an experienced investor. If we look at insurance, again, another area, huge growth. I mean, I feel like I'm repeating myself. But the reality here is, insurance, again, not a particularly widely spread product in Southeast Asia. So I think, it's clear that it's untapped in a lot of ways. So the industry is getting there. I think insurance is a little slower than banking, to be candid with you. It is moving in the right direction, but I would say it's at least a couple of years behind the banking trend that we see in fintech. And really, again, in this situation, you kind of have a couple of different elements of this. You've got the incumbents and what they're doing, and the incumbents are doing a lot. They understand the need for them to develop more solutions, and really, it's about focusing in on helping them be more nimble and more flexible, and in some ways, sort of working around their core technology. And I think what's also happening is, you are seeing upstarts, right? You are seeing companies that are trying to sort of tackle the consumer and go right at the consumer. But more of those have been around distribution, more about customer experience, and in a lot of ways working with insurance partners. Because again, getting in to be an insurer and underwriting your own products is a very difficult process and fraught with a lot of regulation. So it really becomes more on the distribution and the customer facing side on let's say that sort of consumer insurtech space. But as I said, on the B2B space, it's more about empowering the insurance companies and sort of improving their operating models. So that's a good overview, I think, hopefully, of the different types of things. We can maybe dig in more on that on some Q&A. Fintech funding and trends. I think here, again, this chart maybe isn't really jumping out at you, but it is just amazing what an incredible year 2021 was for fintech investing. And that was globally, not just Southeast Asia, but I think Southeast Asia just smashed records. These data we have here, I think it's September 30th. So it's not even full year data. And I think, we're really looking at a 3x number of investments in dollars, dollar investments upon the previous high in 2019 and 4x on 2020. So it's just staggering numbers. I think, what we're also seeing is a lot of mega rounds. So, while these numbers are staggered, it is a bit weighted towards, 100 million plus rounds, which were rounds we weren't really seeing in Southeast Asia until 2021. So this is kind of a new phenomenon. And as you can imagine, with mega rounds, you're starting to see a lot of unicorns, which again was not something we were seeing in before 2021. So 2021 was really an incredible year in the number of deals, the size of the deals, and the number of newly minted unicorns. Part of this is driven by the global investors that have come in. If you really are following Southeast Asia, you kind of look who are the unicorns. Often you'll see a Tiger behind them, or a Cotu, or an Excel, or an Insight, or a Heda Sophia. Some of these very large global funds are coming in, and they've got very deep pockets, and that is pushing, I think, valuations up for sure, and that not just at the unicorn level, but really at every stage. And I would say, people ask me, I think anecdotally, I'm generally seeing like 2x almost every level valuations than where we were a year and a half ago. I'm not saying it's a good thing, and I'm not saying it's going to last forever, but that is the dynamic right now, or at least leading into the end of 2021. Next slide. Again, more data around sort of the segmentation, and is clear payments leading the charge. As always, you'll see it on the next page too. I think, from my perspective, payments and consumer fintechs are certainly some of the big names out there, but I do, and we'll talk about this from an AFG strategy point of view. The enterprise B2B fintechs are starting to pick up a bit. We're starting to see a lot more of these solutions that are starting to get funded and starting to get a lot more activity. I think, the consumer space, you're seeing almost a consolidation of winners. You're seeing some guys really jump ahead. But what we're also seeing is the industry needing B2B, white labeled enterprise solutions. There's so many people that are trying to kind of catch up. And as a result, I think this B2B enterprise fintech is really a trend to watch, and we're starting to see that. This page, again, a bunch of names here. You'll see a lot of payments. And I think, the reality is, once again, it's been a really great year, 2021, with some huge raises. Turning away from funding, I think the other thing is, it was not just a record-setting year for funding. It's been a record-setting year for exits in Southeast Asia. the number of exits that have happened and the size of the exits have happened. This is something, again, we have not seen in Southeast Asian fintech prior to 2021. And so for us, it's great to see all this. I think the reality is, it's a combination of what we're seeing in the global environment, not just Southeast Asia, but, it's phenomenal market conditions last year. But what you're also seeing is more exit opportunities. That's, certainly SPACs have helped. I think some of these names here are SPACs. So it's giving a few more of these, let's just say, public listings that would not have necessarily happened through the traditional IPO route. And I think the other part of it is there's a maturity cycle that's happening also in Southeast Asia. So a lot of these companies were founded, 5, 6, 7 years ago. So we're starting to get there. And I think what you're starting to see is now people paying a lot more attention to what's happening in Southeast Asia because of some of these big names. Exits will continue. I think the Southeast Asia is primed very well for future exits. Don't need to jump into each of these things, but I think it's very clear that there's a large number of regional tech giants, and some of the fintechs themselves are getting very large, and they're becoming quite acquisitive. And that could also be global funds, global tech companies and global fintechs that are starting to look at Southeast Asia and believe that acquisition is a good pathway for growth. Clearly a lot of liquidity in the system. And this is, as we see in the private markets and the public markets. There's also a lot of interest now from the stock exchanges within the region and globally, now that Southeast Asia has brought forward a few really interesting tech companies, and there's a global appetite for what's happening from investors in Southeast Asia. And I think the other part of it, which is a bit, goes back to a little bit of the maturity cycle. We're starting to see maturity of funds. Some of the funds that were sort of the earlier stage ones in Southeast Asia are now becoming kind of end of life. And when funds become end of life, they start trying to kind of see if they can get exit for their portfolio companies. So I think there's an element there from that dynamic, which I think will start also pushing investors effectively pushing more and more exits over the next couple of years. This stage, I just want to turn a bit towards AFG and what we've done. And I think we will also cover a bit of obviously where our thesis is, which I think will very much align with some of the discussion I just went through. But AFG Partners is something, it's basically a very simple concept. We do one thing and we do it well. Our view was to be very specialized, very focused, and really become a value-added investor in our space by not doing too much, by keeping our focus in one area, and by developing an investor base specifically from that area. We feel that we bring a significant advantage of understanding the industry, understanding the region, and also being able to provide the value and added support because of the experience that we have and the network that we have developed over the last few years. And so, AFG Partners is a B2B enterprise fintech fund. We're closing in on 25 million. We're not quite there. We're around 20 million at the moment, but we should get to about 25 million. So pretty modest first-time fund. So we're looking to obviously grow into larger funds over time. And really the focus is enterprise B2B fintech that wants to grow in Asia, regardless of where the companies originate from. So that's really an important part of what we do. We don't care where the companies are born. They can easily be born in Korea or Singapore or London or New York, as long as there's an Asian angle. It's very important that there's an Asian angle because our approach is we want to get access to the best deals. And to get access to the best deals, you need to add value. It's not about purely investing and bringing money. It's about who brings the most value. And the smart companies, the smart entrepreneurs, and the good ones, they don't need the money. And they use their capital table very strategically to identify the most value-added partners. So we're a small fund, and we end up co-investing with larger funds because our focus is primarily in post-revenue companies. Sweet spot Series A, we'll opportunistically do Series Bs, and we'll also do some pre-As. But it's about really coming alongside of larger institutional investors who we know well and coming as a value-added co-investor. We've been doing this for 5 years, so you can get a sense of some of our performance. Most of it, of course, is unrealized because we're still relatively early investments. And I actually had a really good pop again today. I have a company that's now worth $3 billion that I was in, which is made me very excited, and we'll make that IRR jump up. Next page, our thesis on Southeast Asia. Really here, a lot of what we just covered. We're just very bullish on what's happening in Southeast Asia. We think that there's just the demographics and everything we just talked about is a phenomenal growth spot. We also believe that fintech in itself is very much positioned to take advantage of some of the elements that we've seen in Southeast Asia, and those fintechs, are basically looking at situations where there's sort of three angles, and we have consumer fintechs that see opportunities and they're jumping in, of course, but we also see a lot of fintechs that are working with financial institutions. The financial institutions, and that's where we spend more of our time, to be candid with you. The financial institutions are not going away. They need to evolve. They need to innovate. There'll be winners and losers. Some may disappear, but as a whole, financial institutions understand what's happening. They've been slow to embrace the change, but we can clearly see the need there. We clearly see there are opportunities for them to grow. And so from that perspective, we spent a lot of time there. We also spent a lot of time with the non-financial institutions, let's say the tech companies and the other groups that are looking to bring financial services into their businesses. So basically the world where tech and finance merge, we spent a lot of time there. And again, most of those groups are not going to build their own solutions. And same thing with the banks. Most of them are not going to build their own solutions. They understand that there's no need to build their solutions. And I think the reality is that they can't do it as well as the fintechs. I've always say that the fintechs have an advantage in being specialized. And I think that that's one thing that we're going to focus our energy on, is identifying partners with financial institutions and non-financial institutions, so they don't need to build these solutions themselves. More quickly again here, our focus, I mentioned Asia. It doesn't matter where the companies grow or born, I'm saying, as long as there's a growth story in Asia. FinTech focus, as we mentioned here, to me, what I want to emphasize is we spend a lot of time on the fin and the tech. We're very, very interested in entrepreneurs that have great domain expertise and have a strong technology background, that are building very difficult things. And we focus on companies that are solving real problems today, particularly big problems. So it's particularly post-revenue companies, companies that have visible traction and have really a really interesting growth story and have proven themselves, at least in their home markets. As for the verticals, which I think could be interesting for you guys, I'll spend a bit more time on this. Basically, we've identified 5 areas that we focus most of our energy on. First one is embedded finance. To me, this is the story about enabling fintech. It's the infrastructure and rails. Part of the reason why we don't do B2C fintech is because we want to bet on the infrastructure and the rails. We want to bet on the people powering and who are technically behind a lot of the B2C solutions. So I'm really not interested in trying to pick a B2C winner. I'm looking for the fintech and the infrastructure that's being built to drive a lot of that. The second thing that we spend a lot of time on is, we call it asset management capital markets, but really what that is basically people solving big industry problems, difficult industry problems with real domain expertise, very specialized problems, and it's really more for enterprise sales cycles that we spend a lot of time in, basically things that we believe the financial institutions won't be building themselves, but if you bring the right domain expertise and technology, you can create global businesses around that. InsurTech, which we talked about, huge opportunity in Southeast Asia for sure. Financial tech stack is another interesting one. I think that's a terminology we've used broadly around what I alluded to earlier about how SMEs and businesses need fintech solutions. They need fintech solutions to build their businesses, to run their businesses. And so we spent a lot of time looking at those kinds of businesses that are looking to power the digitization and the financial services embedding for SMEs and other consumers. And the last part, I call it enabling tech. I also use the word tech fin. And this is basically, companies with really strong tech, cybersecurity companies, AI, machine learning, big data companies, blockchain companies that are solving industry problems, that are using really interesting technology, and they're solving problems within financial services. The interesting part about a lot of these businesses is they are very global in nature, and also some of them can port outside of financial services. They don't need to have a purely financial services solutions. They can focus on other sectors. Last slide I have now, don't need to spend too much time on this, but we have made 4 investments in the fund already. So I've outlined a little bit of each of these things which fall into our different categories of interest, and happy to elaborate more on that, but I kind of feel like I've gone a little bit over time. So I'll stop and pause here for any questions of Michael.
Well, Ron, thanks again for your overview of these hot markets in Southeast Asia, and also the recent trends, particularly with respect to the venture capital pouring into these hotspots in the Southeast Asia. I have prepared a small list of questions. So let me kind of review those questions, and then I'd like to hear your thoughts on that.
Sure.
First question is, as you clearly mentioned, that Southeast Asian market comprises of the block of countries, each country at varying stages of their economic development, and different penetration rates of financial services. For example, the bank penetration goes from 31% in Vietnam, 35% in the Philippines, to 85% in the Malaysia, and 98% in Singapore. Yet, as you pointed out, smartphone penetration is at 72% for Vietnam, 100% in Indonesia, 148% for Singapore. So when I look at the landscape, the Singapore, Malaysia, Thailand are looking at this sort of a mobile payment or a digital payment as a means to increasing non-cash users in the economy. In contrast, the Indonesia, Vietnam, and the Philippines view it as a means to increase financial inclusion. So in that regard, it appears that a singular monolithic approach to Southeast Asian market would not be sensible, that a country-specific approach would be better. If that's the case, which country, in your opinion, would be an optimal point of entry for fintech player from advanced countries such as Korea, a country with a full bank and credit card penetration and extensive digital infrastructure? The primary reason for asking this question is that I have seen or observed, interestingly, that many Korean startups, including the fintech players, seem to have this constant infatuation with Vietnam, a country that is very less developed than Singapore, Malaysia, and Thailand, and even the Philippines, in those aspects mentioned above. Yet, because of the fact that some of the largest Korean businesses, such as Samsung, have large factories in the country, and many Koreans have traveled that country for pleasure, and that country with a large population size of 97 million and fast-growing middle class somehow has been attracting many Korean startups and VCs to investing in that country. So what do you see as a main upsides and the pitfalls in such a strategy or approach?
Yeah, no, thanks for the question. I mean, your question was always probably better than my answer, actually. You hit the nail on the head. I mean, certainly, those statistics around bank penetration and card penetration and internet penetration. I mean, it's really staggering, the differences, right? And I think the reality is, and I know this sounds like not necessarily the answer you want to hear, it really depends which route you want to take. It depends on a lot of different things. I mean, obviously, the main thing, it depends on what your business model is. And I think, there's different business models that are going to be relevant for different countries for the reasons that you mentioned. And I think, the reality is, even, do you want to do a B2B or a B2C model? That's a very different equation. Whether, what's the maturity level of customer you're targeting? What's the sector that you're doing? So it really is going to be dependent on the business model. Now, that's one element of it. I think, certainly you cannot treat Asia as and then so I say I'm an Asian fund. I mean, that's even more broad, and not even Southeast Asia when you think about the differences in all the different countries. So we all understand that localization is incredibly important, right? And I think the reality is, it's partially the numbers you mentioned. It's partially the fact that regulations are different, consumer habits and cultures are different, and just the nature of geography, is different. Singapore versus in Indonesia, for example, and the size of the countries. So I think all this is, it's hard to pick a specific country. I do think it's important that you do your homework and you do find a market which resonates well with your products and services. I think that's really the key answer here. And I know that sounds pretty obvious, but I don't think there's any other way to look at it. You can't look at it in its totality. You have to be very specific to your business model as to what's going to work with each country. I think the other part of it is also depends on what partners you can develop. It is possible that maybe, if Koreans have a lot of great partners in Vietnam that they can work with on the ground, that maybe they have a better chance of succeeding. So partnership is very key. In I think most countries, the same would be, I guess, in Korea as well, for a foreign company to come in. So I think, it's a combination of factors, but certainly, partners that you can find, the right partners and the type of business model.
Yeah, actually, the reason I asked this question is because if you are a fintech player in a country like South Korea with established infrastructure and the advanced standards in terms of the data privacy, data access, these are the kind of operating mode that we are taking for granted. But then you go to countries like Vietnam or Cambodia, those infrastructures or regulations are absolutely absent. You just cannot rely on anything. That you have to build a lot of things on ground zero.
Exactly.
And so that creates a additional layer of complexity as a fintech player, because you assume that those kind of infrastructure is already available in those markets. But when you actually get there, realize that many critical components of those infrastructures are absent.
Correct. And exactly that point. And that's why I think it's a much more natural, my expectation, again, without knowing each business, my expectation is to be a much more natural fit to be a more developed market, whether it be Singapore, Malaysia, even to a certain extent, Thailand. Yeah. That's more realistically, that makes more sense. I also think, and we'll talk about this maybe a little bit later, I also think a B2B model is a lot easier than B2C. Not that B2B is easy, but B2C is really hard. B2C is going to be really, really hard to break in, especially most B2C models are there's already local players in pretty much every type of model you would see, is my sense at this stage.
Okay, good. Let's move on to that digital investment services in Southeast Asia. I think, as you alluded to in your presentation, there are different levels of the sophistication on the part of the consumers. In Korea, as you know, Koreans are now using, they actually access a lot of the mobile P2P lending forms to make loans to the other individuals. Instead of getting the 1% interest on your bank deposits, you actually could, receive 10, 11% interest on through the P2P lending platform. Or you can also invest in stocks, ETF, or some of the alternative assets like, for example, the investing through the REITs for real estate deals. And now some of the more digital currency platforms are also available in the form of the application, mobile applications. So maybe you can kind of explain or describe some of the main investment product offerings in Southeast Asia.
Yeah, correct. I mean, I think sort of 2 points here. I as we mentioned before, there's definitely distinctions between the developed markets and the emerging markets as well, for sure. And I think, as we alluded to earlier, the developed markets are really more about improving the experiences for investors, probably moving a bit more down to to the broader mass wealth and the mass market, but in a sense of it's more of an educated market. It's more about sort of bringing different types of investment opportunities, improving the service, cheaper solutions, etc. I think as for emerging markets, yeah, it's really about we're starting from almost ground zero in the sense of really developing a whole new generation of investors. It's education, and it really is much lower cost structures and things like that. So I think those dynamics are very clear between the different countries. I think it also means that in developed markets, a lot of the larger financial institutions are rolling out a lot of different solutions. And so while you have fintechs there, there's a lot of sort of B2B fintechs working with those larger solutions. And when the emerging markets, yeah, there's more opportunities. There's more people trying to break in and kind of create a brand for themselves. And let's say the more consumer fintechs have a slightly better start there, while the banks are a little slower. Now, the types of things we're doing, not very different from what I imagine what you have in Korea. So I would sort of put them in kind of three different categories. And online brokerage is obviously quite hot,
Yes.
and particularly in Southeast Asia. There's a couple of companies in Indonesia called iJob and Pluong that have recently raised significant money. And then there's Anfin in Vietnam. And those, again, are really, if you look at what they're doing, it's very basic investing, stocks, ETFs, mutual funds. But broadly from the perspective of, like I said, education, first generation type investors, making it a much better millennial and sort of new investor experience. It's also crypto. We're seeing a lot of crypto starting to come now. So getting crypto startups. So there's a Pintu in Indonesia. So that's something we're starting to see where, again, that may run into regulations. So let's see how the regulatory environment is on that. But there's definitely a lot of wealth management groups trying to figure out how to bring crypto into the equation. Then you have your more traditional robo-advisories, as you would imagine, more the things that you would see in the sense of portfolio management and primarily either providing portfolios or access to ETFs and sort of helping provide more of your sort of first gen wealth management type solutions. And then the other thing we're seeing quite a bit, and this is more, I would say, in the developed markets, is private investment platforms. So we're seeing a lot of alternatives coming to the market. So whether it be a Zen Capital or a Fundnell, and some other groups that are offering PE funds and offering real estate funds and hedge funds and other aspects, and of course secondary markets and other aspects of private equity that's coming in. And so that's, I would say at probably very similar to what you'd be seeing in South Korea. I don't necessarily think, other than probably the more educational ones, I imagine South Korea is quite more sophisticated in their approach around investing. So it's really, again, the traditional developed market solutions are probably quite similar.
Okay. Good to know. Thank you. Maybe could you add some colors on some of the more popular or sort of the trendy digital insurance products being sold in that part of the world as well?
So again, that's an interesting area. And as I alluded to earlier, insurance is a little bit more behind. It's getting there. And again, a lot of it is just the fact that you need underwriters it's very difficult to become an underwriter. So you need to have insurance companies wanting to partner. And so, I think the way I would look at it from Southeast Asia is, it's clearly a growth area. We've even seen something, I think there was some report where Swiss Re said by 2029 that Asia will be 42% of all global insurance premiums. So the growth of insurance in Asia is expected to just really be significant. I think it's still very, very early days. And most of the markets across the region, particularly in Southeast Asia, are largely underserved. So the incredible opportunity there. So we're still in the very, very early days. I think the reality is we look at sort of insurance in sort of two ways. It's the B2B front, which we see quite a bit of. And so the B2B guys are really focusing in on working with the insurers in an effort to modernize their technologies for the most part. I think the reality is, I would say, previous first-gen insurtechs were very focused on distribution, being able to get more partnerships, to get more eyeballs onto your insurance policies and to help you sell more insurance. That has certainly been the first wave of insurance, and there are companies like Simbo in Singapore that focus quite a bit on distribution. But then what we're seeing now is more of the, let's just say, the infrastructure, right? The stuff that's, trying to tackle the legacy technologies in sort of the larger insurers. So a lot of the B2Bs we're starting to see are focusing on helping the insurers digitize and optimize their workflows and to really modernize their technologies. And so examples there, actually one of them is a portfolio company of ours, is called Ignatica. And so Ignatica is focusing in on policy administration and product management. So their idea there is these legacy systems are really what are preventing the growth of modern new digital insurance products. It's a lot of it is a technology problem. It's not so much a lack of appetite to do it. It's just the systems don't really enable the type of insurance products, these legacy systems. So Ignatica is trying to bring a new system around policy administration, product management, working with insurers effectively to help them launch new products, launch them quicker, cheaper, making them more customized, more flexible. And really what it also allows to do is it improves the customer experience. So what you end up being is you're in a position where you are making the user experience more seamless as well, because your technology can be updated real time and it can be exposed at the consumer layer in a way that the legacy technologies haven't had. A couple other ones that we've been looking at are Coherent and CoverGo. Again, infrastructure plays. Coherent more on the actuarial side, so really working with underwriters and sort of improving the actuarial elements of what insurers need to do to write these new products. And CoverGo is really more on the API and sort of open API and distribution space. So again, really they're about trying to focus maybe a little bit more on embedded insurance and helping to extend insurance out. B2C side, the big names you'll hear are like Koala in Indonesia, Sunday in Thailand. Of course, Sing Life was one of the first ones in Singapore, which is now bought by Aviva or merged with Aviva. And those are a little bit more B2C, a little bit more in a position of trying to own the customers. But again, in most cases, particularly the Southeast Asian ones, they have to work with insurers in the background. They're not actually necessarily digital insurers just yet.
Yeah, this really brings the very interesting comment about you mentioned that there are key drivers behind the growth of the B2B fintech solutions, as you mentioned, because basically the existing financial institutions, the incumbents, are feeling that their profitability is being eroded by the fintechs and the other tech-driven major platform players like Gojek or those guys are basically encroaching on and diversifying their product from their core business to the financial services, and then also the because they want to basically be a platform where their users will continue to visit their platforms on a variety of reasons, including the accessing financial services. So we've sort of seen that in Korea, but quite frankly, as you probably know, the Korean financial institutions seem to be reacting rather cautiously, taking very a incremental approach as opposed to the radical approach. Could you give me a sense of how urgent, or what's the sense of urgency among these established financial institutions in that part of the world? Is it because the world out there in Southeast Asia is it maybe the regulations are such that are basically allowing the more of tech-driven fintech players or these sort of the large established big tech or e-commerce players to allow them to offer these sort of financial services? Maybe the regulations are much more free or accessible for these players to offer. Maybe there is no much of regulatory hurdles for them. Is that another reason why you're seeing this sort of the urgency on the part of the FIs?
No, I mean, that's a tricky one. I wouldn't say the regulations have necessarily are that much more flexible per se. I wouldn't go that far, but I do think that the wake up call was sound. And let's take a step back. So I basically, I'll give you a little bit of history for myself. So I worked for larger banks for 20 plus years. Okay, I'd mainly done COO roles. I'd worked with larger global financial institutions, and a large part of what I did was building strategies and developing the projects and the initiatives, and really being the stakeholder and driving the change and sort of managing the projects. And it was very, very clear to me that most institutions are not very good at delivering IT projects. And of course, they can deliver stuff, don't get me wrong, but the reality is it's not necessarily what they're known for. They're not really tech companies as much as they like to think that they are. The other reality is when I left 5 to 6 years ago, it was clear to me then that institutions needed to innovate, they needed to change. It was very early days. But I met, I'll give you another example, how I got on this journey. I met a company that was, doing something in a space that I understood very well. It was actually a space that we were looking at Merrill Lynch. And it was a very significant initiative we were trying to look at and potentially build ourselves. And basically he said, hey, Ron, the reality is we will beat the banks in that game because we are doing one thing. We can do this one thing faster than them. We can do it cheaper than them. We can do it better than them, and we'll constantly iterate. And often they'll provide variable costing, right? So it just resonated. It just struck me over the head. And I was like, that's kind of the day I was converted. And I'm like, yes. Now that was 6 years ago. And it's been a slow ride. Like I will tell you that, B2B enterprise and the adoption of fintech by financial institutions has been slow, but it has improved. It's continuing to improve. And I see it, and I think the reality, and you could look at it even with JP Morgan, going with a fintech for their new core banking system. I mean, if JP Morgan is, going to be changing their new core banking system, why isn't a Korean bank or a Thai bank or an Indonesian bank going to do the same thing at some point? So I think the reality is that we're all going to get there. There'll be different paces of change. And you'll see leaders. You're starting to see leaders. I mean, look at Standard Chartered and DBS as a regional leader. But even, you look at within each of the countries. I mean, Union Bank in the Philippines has a great reputation. Siam Commercial Bank in Thailand has been doing some great stuff in their sort of technology innovation. So it's getting there, and it's beyond just corporate VCs, which you see a lot of these days. It's beyond sort of just fintech teams and innovation teams. I think it really is clear that these organizations are being challenged from fintechs, and that they need to change. What's also being clear, and this is also very important because it goes hand in hand, there are now a much more mature group of B2B fintechs that can support their needs. And so what that is that's coming from the region, but it's also coming globally. It's part of the reason why AFG would look globally. I don't care where the companies are born. If you're a New York fintech that wants to grow in Asia and you have a phenomenal solution, and you want to grow out here, you should be speaking to Korean banks. You should be speaking to Thai banks. I mean, there's elements of that, which I think is also starting to happen. So I think it's a combination. I think it's the realization that they can't build it themselves, but also now they're seeing more and mature fintechs that can actually partner with them and solve the problems, and not necessarily be a liability in their minds. And so it'll never be easy. But I think it's clearly happening, and it'll continue to accelerate.
Okay. Maybe then, could you maybe give me an example? What are the sort of the typical background of all these sort of entrepreneurs, particularly in the B2B space? Where do they start their professional career? Did they start from existing financial institutions or from the large platforms like Grab or Gojek? Or what are the, and also are these sort of the B2B fintechs, or they formed through joint ventures with big tech, or they are really typical entrepreneur, Silicon Valley style, smart group of co-founders getting together, start from the scratch, building the business one by one?
Yeah, it's a mix. It really is a mix. I mean, I think, we don't have sort of that depth of Silicon Valley where, it's the serial entrepreneur, right? And there's very few. We're starting to see that. We're starting to see a couple of serial entrepreneurs. We're starting to see some guys spin out of the larger groups, whether it be Grab or Lazada. And so, we're certainly starting to see that. I think on the B2B side, what you do see is you see a lot of ex-financial services people. You really, I mean, there's a lot of people kind of like me and yourself, Michael. We've been around a while. We know some stuff, maybe a little younger for me.
Yeah.
But I think the reality is, you know, they've worked 15, 20 years. They know what's going on. And particularly they understand the industry problems and they have a network. So I would say certainly B2B enterprise stuff, it really benefits to have that financial services experience. And I feel that a slightly older, more mature works in that environment. But some of these other solutions that are more B2B2C or really more focused on the SME and more the partnership models with financial institutions have often come from the tech companies, from sort of spin outs of some of the larger groups. And of course, you always have a sprinkling of first time founders because we're still very early in the, let's just say the ecosystem and the founder cycle in Southeast Asia.
Okay.
As for your answer on JVs, not so much. I mean, we see a lot of acquisition that happens from the bigger tech companies. And obviously they do build themselves, but they're quite acquisitive. I think for the banks themselves, a few of them have incubated some stuff here and there. I know Standard Chartered has done a few things and even ING's tried to do a few things in some spaces. I would say on the most part, they're more partnership than JV.
For fintech players from Korea or the incumbent financial institutions from Korea who are new to the Southeast Asia, who are interested in exploring the entry into the Southeast Asian market, what kind of advice would you give and why?
Yeah, I mean, I have a bit of a bias. I think B2B rather than B2C. I think B2C is really a challenge, partially because of the cycle where we're at, but also some of the things we always know about B2C, about just regulation and localization and capital that's needed, and also broadly just competition. To be candid with you, you know, there's so many people doing the same thing. There are going to be winners in B2C. But I think there are going to be a ton of losers. I'm not a huge proponent of bringing a B2C model from an outside market. I'm saying it won't work, but I think it's more of a challenge. B2B, I think has more of a chance for sure, especially given the maturity of the Korean market. I think, you know, if you are working with Korean financial institutions, I don't see why a lot of those solutions wouldn't port, especially if it's a non-regulated business, especially if it's very tech-driven and things that are very cross-border. So I think if it's a cross-border, non-regulated type of solution, I think those things are going to port much, much better. Either way, you know, there's an element of having to be a bit local. You need to make sure that you have good partners on the ground, whether that be in either or even individuals on the ground, whether that be from a sales cycle or just an implementation and support point of view. I think, you know, having that local physical presence / partnership is going to be really important. And I think, as I mentioned earlier, that's part of the driver when you're determining where you want to go. The other thing, which is kind of interesting, is I think you have to also realize Southeast Asia is very price sensitive. It is, you know, the reality is maybe they're not just the capital they have to put towards digital and technology solutions is a little bit less. So, you know, we need to make sure that we have sort of solutions that, you know, may have to be priced a little bit differently, or at least have to be quite capital efficient and have a very clear return proposition for people. There's a real ROI. I think that's important in every market, but I think particularly in Southeast Asia, you know, it's where I think some of the economics and pricing, and whether that be the price of staff or everything, I mean, just generally pricing is cheaper. And so as a result, the pockets are a little bit tighter, maybe in some of these institutions.
Well, on the note, I'd like to thank you again for your time. Well, this is kind of, in my view, I think very rare opportunity for Korean fintech entrepreneurs and also as well as the employees at the BNK to hear from the expert who actually has a underground experience in Southeast Asia, having lived in Asia for a number of years as a incumbent member of the very large financial institutions. I think it has a lot of resonance, I think, with also the current employees in the BNK banking group too. And so with that note, I'd like to thank you again. By the way, in case anybody wants to reach out to Ron for a piece of advice or the tips, or the if you are also seriously considering to form sort of a partnership with these companies, any of these companies, I'll give out to the emails to those who actually inquired, and then you can feel free to reach out to Richard on an email.
No, I'd appreciate it. And I think for me, I mean, again, thanks for the opportunity. I really enjoy this. I think it's great that, the initiative that you have, and hopefully this is informative. I think the reality for me, Korea is really important to what we do as well. I think, I want to continue to extend my relationships in South Korea for sure. I think it's, I would say certainly two angles where I'd love to kind of continue to work with you and the people in BNK and in your program is finding companies that really are looking towards supporting outside of Korea. I think that's what we do. We specialize in trying to help that. And also we're looking for financial institutions in Korea that are really interested in embracing overseas solutions that will be coming in. Because I think, as we said before, we live in a global world. While there's a lot of great solutions being built in Korea, there's great solutions being built all over the world. And so the great ones coming from Korea out, that's great. But also finding financial institutions that are looking outside to find some things that are being built outside of Seoul is also, or outside of Korea in general, would be something we'd love to develop relationships with you going forward.
I know that BNK, one of the core subsidiaries of BNK Financial Group is the Busan Bank, and I believe that, and also there's a capital arm of we call BNK Capital, and I believe the BNK Capital has some operating subsidiaries in selective emerging markets of the Southeast Asia. I think, namely Cambodia, maybe Vietnam, and Laos, maybe. Okay. And they do have, maybe they may have some infrastructure solutions that they need to tackle. I'm sure they probably brought it from Korea, and I'm sure some of those solutions are probably need to be more reflective of the current market situations there. So I'm sure you can also probably help them. Again,
I'd love to do that.
Yeah, again, please feel free to reach to the P Square. We'll be happy to provide you with the contact information, Ron, and then you can take it from there. Again,
all right, super.
Again.
Thank you very much.
All right, bye-bye.
I enjoyed it very much. Thank you. 감사합니다.
감사합니다. 자, 이것으로서 오늘 강의는 다 마쳤고요. 마지막으로 다시 한번 거의 1시간 조금 넘는 시간 동안 장시간에 걸쳐서 본 강연을 잘 들어주신 여러분께 감사드리고, 다시 한번 말씀드리지만 혹시 그 AFG Partners의 그 포트폴리오 회사들이 동남아시아의 다양한 솔루션들을 제공하고 있다고 합니다. 그래서 혹시 동남아시아 쪽에 진출을 하시려는 계획이 있는 기업이라든지 특히 B2B 쪽이요. 아니면은 그 현재 동남아시아에서 현재 운영을 하고 계시는 우리 BNK 금융지주회사 계열사들 중에서 어떤 particular한 그 뱅킹 솔루션이라든지 어떤 인프라스트럭처라든지 그런 솔루션들이 굉장히 핀테크 기반으로 다 만들어진 기업들이 자기 포트폴리오 회사에 있기 때문에 한번 연락을 주시면은 저희한테, 그럼 저희가 란 사비노 대표의 이메일을 드리겠습니다. 그래서 그쪽으로 연락을 해보시고 얘기를 해보실 수 있게 저희가 연결은 해드리겠습니다. 다시 한번 장시간에 걸쳐서 본 강연을 들으신 여러분께 감사드립니다. 안녕히 계십시오.